of the depreciation over the past few weeks, if not months, of RMB toward US dollar. May I have Professor Xiao very briefly to help us understand your reasons?
Well, it's mainly because RMB is trying to de-link or weakening the link with US dollar, and trying to use the basket as a benchmark. So that caused this weakening in terms of US dollars. Yeah.
What about you, Professor?
Now, certainly the People's Bank of China has been trying to convey the message that it is trying to manage the currency's value against the basket, as Professor Xiao mentioned. The question is whether the market really buys it, because the reality is that most market participants within and outside China still very much focus on the CNY dollar rate. But unlike last year when the RMB depreciated and all hell broke loose, this time markets are taking it a lot more calmly because the situation has changed. China's economy seems to be in better shape. The capital outflow problem has decreased. So at some level, I think it's defensive posturing by the PBOC, because there is the anticipation that with the Fed rate hike and with further easing of monetary policy by the Bank of Japan and the European Central Bank, the dollar will rise, and you don't want the yuan to rise too much along with that.
Well, for A-share market here in China, on the mainland, very calm, not much reaction. However, for Hong Kong, it is mainly international investors over there. There are, and there have been, quite some strong reaction, to say the least. Professor Xiao?
Well, the market people, they still look at the RMB and the US dollar exchange rate, because that's what people get used to. So for them, if they see RMB depreciate significantly against the US dollar, they will start to hedging against any further decline. So that's why a lot of people in Hong Kong and also in mainland China, they are starting to hedging against the possible future depreciation. And this is actually necessary and useful, because most Chinese households and companies, they holding RMB assets, very little US dollar assets. So certain degree of diversification is actually very useful for the financial systems in China and also for the global economy.
But the question is, the RMB, of course, depreciated against the US dollar, but many currencies have depreciated against the US dollar over the past few months. And RMB against some of the other major currencies actually appreciate rather than depreciated.
Now, certainly on a trade-weighted basis, the move is hardly as dramatic as suggested by the CNY dollar rate. But again, as Professor Xiao mentioned, the reality is that a lot of trading still takes place in the CNY dollar bilateral trades. That is still the thickest trade among all the bilateral currency pairs. So that's what the market needs to focus on. Now, the question is whether this depreciation of the RMB against the dollar is going to lead to another wave of capital outflows. And there, I think we are seeing relative calm right now, because the PBOC and SAFE have managed to clamp down on capital flight. And so long as the government is able to manage the other capital outflows, which they can if you're generating a trade surplus of $500 to $600 billion a year, plus another $80 to $100 billion worth of FDI inflows, then all the math adds up, and a gradual depreciation of the RMB is perfectly consistent with gradual outflows and the economy remaining calm and stable.
But you know, Professor Xiao, capital outflow has been a long discussed topic, and yet it has always been there over the past few years. That, in a way, has indicated certain issues. Professor Xiao, what do you make of it? And is this capital flight eventually going to have enormous amount, or to a certain extent, kinds of impact on various factors of China's financial reform, or influencing China's speed of the financial reform?
Well, capital flight, if concentrated in a few months, then it will have problems. But if it is just like Eswar has mentioned, if it's gradual and steady, and also, together with capital inflows, which, the foreign investors, especially pension funds, and also central banks, they actually need to hold more Chinese assets. So the key is actually to managing this swap. The Chinese households and enterprises, they need to diversify. They need to put some of their assets out of China and to get a better return and also better pricing in terms of domestic asset relative to the foreign assets. And that's, in the long run, is actually necessary and very useful. But if every Chinese households and companies are doing this at the same time, it will have problems. At the same time, the foreign central banks, pension funds, they actually underweighted the Chinese asset. So they need to increase their weight. And the issue is that they still watching the performance of the Chinese central bank and the Chinese government, because they are concerned about the capital flows when they invest in China, whether they can take money out of China in the future. So a lot of these issues are causing short-term tension.
That's right.
Otherwise, I would actually see more capital inflows, from foreign investors.
Professor Prasad, it's a chicken and egg thing, isn't it? I mean, on the one hand, the government and the central bank wants to make sure the amount of capital outflow would not exceed the level that would necessarily going to impact negatively on the Chinese economy. But on the other hand, once policies are out aiming at control capital outflow, it would be taken as signals that China's financial reform may not be as fast as people would expect it to be. So it's a very delicate balance, isn't it, Professor Prasad?
It's certainly a delicate balance. And if one thinks about this in the broader context of internationalizing the RMB, certainly opening up the capital account both to inflows and to outflows is a very important part of the process. Letting the currency's value be market determined is part of the process, and invariably there is going to be some volatility in exchange rates and capital flows. That is normal so long as these flows are responding to macroeconomic conditions. But what we saw last year was not only diversification-led outflows, but also some carry trade as corporations were paying down their foreign currency debt, but also a lot of capital flight through unofficial or illegal channels, through trade misinvoicing, money going out to the gambling dens in Macau. And that's what the government really wanted to control, because that is not the right kind of capital outflows. But the problem then is that the policy responses one sees from the Chinese government create a sense of unpredictability. And in fact, trying to maintain the stability of the exchange rate creates complications for other policies that then cause foreign investors, both official and private, to start wondering what the policy environment is going to look like in the future. And that's not good for Chinese financial market development, the policy framework stability, or for the internationalization of the RMB.
Sounds too complicated for me already, Professor Xiao. That complicated job, but that complicated balance in a way.
Well, I think the PBOC actually has been doing a very good job. And that's why the market now has calmed down. But I think going forward, the key is to really watch the RMB and US dollar exchange rate, because that's really most households and companies are watching for. So in the way, the Chinese authorities, they have to have a delicate balance to make sure that people start to diversify, to do rational, investment, but not, causing any panics, in the short run because of abrupt, volatilities in the exchange rate.
That's right. Well, we are talking about some of the domestic factors, how the Chinese side, whether it's financial officials or coming from the general society in the market, can and should respond. But things are much more complicated even than that, because we also got international factors. China's RMB now internationalizing. China's financial reform is going through its process at a time of very volatile international situation, given the recent economic realities of many economies. It's already this time the depreciation of RMB, the fourth yuan depreciation since the central bank announced an exchange rate reform in August last year. The first round, as we mentioned earlier, came right after the reform, when the central parity rate of yuan against the dollar dropped 4.7% in 2 weeks. Then this year, January, with many expecting the Federal Reserve to increase the interest rates. The yuan depreciated 3.9% compared to November 2015. And then from mid-April to mid-July, when Brexit brought uncertainty, yuan depreciated once again, hit 4%. Of course, the devaluation this time, some say, is similar to the scale, at least, compared to that of January earlier this year. But, Professor Prasad, that's why I want to invite your wisdom here. People talk about another change of the decision from the Federal Reserve, so people are expecting maybe further changes, maybe RMB once again depreciate, or volatility with the Chinese market. Professor?
It could well depreciate relative to the dollar, and it should, given the cyclical circumstances of the US economy versus the Chinese economy, because the US economy is in an upswing, and in China, growth seems to have stabilized, but there are still weaknesses in the Chinese economy, especially in terms of export growth. So it might make sense for the RMB to depreciate, but certainly China is a big economy right now, and a sharp depreciation of the RMB against the other currencies would create problems for everybody. So I think the notion of the PBOC managing the currency's value against a basket so that the CNY dollar rate may drop, but at the same time, the CNY, if anything, appreciates against the other major currencies, may in fact be the right thing for China and for the world economy.
Okay. Professor Xiao, I always want to make things more complicated for both of you. So let me mention several factors once again. On the one hand, you have RMB internationalization into the SDR basket and also financial reform, whatever the pace is going on inside the country. On the other hand, you also have international factors. Earlier, Professor Prasad mentioned many of them, unexpected future economic realities. So at this point, how should we read the appreciation or depreciation of the RMB? And to what extent that we shouldn't be worried? To what extent if things become worrisome?
Well, my view is that now people should feel confident that the RMB will be stabilized and even appreciate in the future, because the big picture, China's growth has now bottomed. PPI, the index already turned positive from negative. And the political uncertainty, also reduced. So if you look at the longer term, actually, there's good reason to see productivity increase and RMB to appreciate in the future. And also the property market, which now under short-term control on demand side, which eliminates future bubble, and that also helps to stabilize the currency. So I don't really see any really substantive factors which will lead to any significant depreciation of the RMB, either against the basket or against the US dollar.
All right, Professor Prasad, the final thought.
Now, there is a lot of concern about volatility in the RMB, but if you look at the big currencies like the dollar, the euro, and the yen, they are very volatile and there is no concern about them. So I think the real focus should be here on the quality of macroeconomic policies in China. The exchange rate is seen as a buffer that is going to move depending on cyclical conditions, business cycle conditions in China and in the rest of the world. So even if China is doing very well, if there is turmoil in the rest of the world, the RMB dollar rate in particular is going to be quite volatile. I don't think that volatility by itself is a problem. It's more the unpredictability of policies and the notion of trying to keep the RMB stable and how that leads to unpredictable policies. It makes it difficult to move forward on capital account opening, financial market reform. That is the real problem. So I think predictable policies and a volatile exchange rate may not be a bad combination.